DocuSign post earnings analysis. Watch this stock. You must have heard that DocuSign has reported its earnings outcomes, and the folks at MarketWatch have it that they easily topped expectations with their latest quarterly results as they continue to experience boost from remote work trends, but shares of the e-signature company fell into the extended session after a considerable run-up in recent weeks. Shares of the company, which enables businesses and individuals to sign documents electronically, were slightly in after hours trading Thursday, the 3rd of September 2020, ahead of DocuSign's earnings and the earnings outcomes, but fell about 8% following the call. The stock sank 8.7% in the regular session in a weekday for tech stocks, particularly software stocks that had experienced big recent rallies. DocuSign gave a better than anticipated outlook for the current quarter and the full fiscal year, and Chief Executive Dan Springer told MarketWatch after the earnings call that while some technology companies benefited from work to home trends, many diminished use cases once people can return to face-to-face encounters. DocuSign service will remain more effective than physical alternatives. With our situation, he quote, I really don't see a regression to people saying, I want paper, I want manual process, he said. Still, there's been some concern in the tech investing world about whether the work from home names will be able to maintain their momentum through the balance of the year. And RBC Capital Markets analyst Alex Zukin raised that point on DocuSign's earnings call, describing the company's first half billings growth as nothing short of extraordinary, but commenting that its guidance for the second half does not look like a pretty different kind of growth trajectory. DocuSign's billings increased 60% in the first half of fiscal year, and the midpoint of its outlook calls for about 40% growth in the second half of the year. We feel very good about the second half, Chief Financial Officer Michael Sheridan said in response to Zukin's question, calling the outlook reasonably balanced and positive. DocuSign has focused on expanding beyond e-signatures into other areas of contract management, and Springer told MarketWatch that the influx of digital contracts being signed during the COVID-19 period could prompt more businesses to experiment with the company's analytical tools around contracts, since they have a repository of digitized documents from this period. Okay, and the folks here at Schaeffer Investment Research have other things to say as well, apart from the declines they experience. They have some other historical data or statistics about DocuSign. Looking back at its past eight quarterly reports, 5 of Doku's post-earnings sessions were negative. The security average next day return of 9.1%, regardless of the direction, which is much smaller than the 21.8% move the options market is pricing in this time around. Despite calls outnumbering puts on an absolute basis, the stock's 50-day put call volume ratio of 0.9 at the International Securities Exchange, CBOE, NASDAQ, OMX, PHLX stands higher than 47% of readings in annual range. This suggests a healthier than usual appetite for long puts. Okay, though with the higher than usual volume in the options pit, so far 128,000 calls and 52,000 puts have crossed the tape, 5 times what's typically seen at this point. The weekly September the 4th, 300 and 250 strike calls. The most popular, with new positions being opened at both. Okay, so we're going to look at the options, but first of all, we just look at charts. We can see what's going on here. Since the 12th of March 2020, it has just remained seriously bullish. I mean, it has. The only time I could actually say it had what might even slightly look like a consolidation, I wouldn't really call that. I wouldn't really say that. There's just very few days here. You know, we are talking about 1, 2, about 3 days. And okay, well, a few days here as well, but you know, you really can't say that those are consolidations. Okay, yes, here as well there are some consolidations, and at one point, yes, it fell below the 20-day trend line. In this case, in this tool we're using, it's a short-term trend line, you know, but in widely it is a medium-term trend line. So you know there isn't much of a consolidation that has really occurred as such in recent times. And then the folks at Chatmail, you know, have been able to come up with some deductions, and then it says they have, when analyzing the support, we can see two important areas. A supporting zone ranging from $213 to 213.37 to 214.52. This zone is formed by a combination of multiple trend lines and in important moving averages in the daily time frame. Okay, yes, 213 to 204. Yes, that's it here. Somewhere around here, 213. Yes, this around this area. Okay, and then you can see there are multiple trend lines there. Most certainly, there's the 20-day. In the broader sense, it is the immediate intermediate trend line, and then the other one here that's rising with the security itself. That's the time series forecast. Okay, they're all around that area, that you know, region as well. Okay, and the important one is the 20-day simple moving average, 20-day trend line. That's the important one in that statement. Support at 190 from a horizontal line in the daily time frame as well. So 190 is around here as well. Okay, support. Okay, so that's around here. Okay, but we don't really see any what is it called? Any trend line? There's no. Well, they did not indicate there's a trend line there, but you know, but the reason for that might be because that was where it bottomed after its most recent significant decline that breached any important trend line. So probably that is why they are indicating that that's the support, and indeed it is around 190 or thereabout. So the others are setup analysis and setup rating. Although DOCU has an excellent technical rating, it does not present a decent entry point at the moment. Price momentum has been a little bit too volatile to find a nice entry and exit point. It is probably a good idea to wait for a consolidation first. Okay, so well, it hasn't really, like we indicated earlier on. It hasn't been very much of a consolidation. Not there has been a pullback, as you can see here. Pullbacks have occurred, but they occur and then they are followed up with yet more momentum in the upward direction. But at the same time as well, we have this earnings call that they put out, and it was better than expected. Even though there are skepticism, about around its ability to come up with such a results as well. But the fact that in a very short time, the fact that it produced a decent outcome, and still the security lost some steam. It can be an indication that it is skepticism towards a security that has demonstrated that it's capable of doing well. Profitability wise, they are not there yet, but in a very short time, what happened the day before this outcome, this earnings outcome came out, which is a decline, and combined with the fact that it demonstrated that the last trading quarter was good. So when you combine that, amongst other things, we have the short interest of 4.4%. That's really not a lot as such, but there's a good chance that in the coming days it might probably do well, slightly well. It might, just simply based on the fact that not much has been the recent this recent outcome hasn't been priced in as such. So even on the in the pre-markets, you can see it is still losing some steam. It has lost 6.25%. This is even with going by this earnings outcomes. This is the people who are trading this are definitely aware of what has happened in the with its what it has reported. So like in a lot of cases, any decline can indicate can suggest that it might be time to step in. So but you decide. You watch and see if it's what is good for you. If you're going to jump in right now, that it has been one of the casualties of the recent decline of tech stocks. So if you think that if you think DocuSign has presented a good opportunity, the combination of being affected by a broader sell-off, and also the fact that there isn't any negative as such concerning the security, going by what it has reported. So you decide, if it's if this sort of mix in sentiments and actions are a good sign for you to take action, buy or sell, or even watch. So and as we indicated, the folks at Schaeffer Investment Research, they have it that the 300 strike and the 250 for this September 4th, and this will expire today, the 4th of September. So the 300 and 250 strike calls, they were the most popular. Okay, this is the 250. Okay, 2,208, and then 3,221. But obviously, by the time they finished that, by the time they were writing their piece, a lot has even changed. So that 250 is no longer the most popular. As a matter of fact, it is looking like, let's see that we have everything. We can even see the 340 has 4,441 open interests. So things have since changed, in that regard. Okay. Thank you again for watching this video, and if you're new to this channel, subscribe and hit that notification bell, and thank you again for watching this video.